Hey everyone, I got an exciting new video for you guys today. It is going to be on dividends. This is actually a requested video from someone in our group. I'm super excited that we've actually had a request out, and I've actually got another one in line after this one. So I'm super excited to get it started too. I'm actually creating a list of investments videos that we can be doing. So if you have any requests, please leave a comment down below and I'll make sure it happens. And then also stick around to the end of this video because I kind of got a nice little possible documentary for you guys to watch at the end of this film. It seems a little interesting for, especially for people who are looking into the stock market. So let's get started. Okay, to understand dividends, we must first understand that when we buy a stock for an individual company, we are actually buying a small portion of ownership in that company. If we buy one of the 95.6 million shares of Callaway Golf Company, ticker ELY, we now own about 0.000001% of the company. In our markets, some companies pay their owners a share of the profits. This is true for all businesses, large or small. Much like AJ at Bodyworks Northwest or Amber Tyler at Amber Tyler, they can get paid by their company as owners. Shareholders can get paid as well. There are differences though. As a shareholder, the company's leadership decides whether or not to pay a dividend, how often to pay it, and how much to pay. Additionally, since there are so many owners, the payment is likely to be much smaller, often pennies per share. The benefit, however, is that you don't have to invest a large amount of time or labor, only cash, and make money doing nothing. Typically, dividend companies are more stable and established and can share in profits because they have an excess of cash flow and a lack of need of capital for growth investments inside the company. We can tell if a company pays a dividend by quickly scanning the summary tab and looking for dividend or yield. If there is a percentage there, the company pays a dividend or at least paid it in the past. Remember that the company's leadership decides whether or not to pay the dividend and can cancel it at any moment. Thanks to the pandemic, a lot of the travel-related companies have chosen not to pay their dividends to survive. For more details on a company's dividends, we can simply type in the ticker followed by dividend and click on the NASDAQ link. Here we can find the annual dividend and historical data on their declaration date, which is the date they announce their dividend, the amount of the dividend, the payment date, or the day we receive our payment, which should get deposited directly into our investment accounts, and finally, the ex-dividend date, which if we buy on this date or after, we will not receive the dividend payment. For LTC, if we buy on or before December 21st, we would get 19 cents per share on December 31st. Now, a dividend yield is the yearly dividend payout divided by its stock price. The current yield is easy to find on the summary tab of most finance sites. The higher the yield, the more dividend payment we get for our money. While the current yield is calculated by using the current stock price, our yield is calculated by dividing the yearly dividend by our average stock price. Since the stock price is always changing and yearly payouts can change, the current yield is likely not the same as our yield. Dividends can be a great addition to our portfolio because they increase our cash flow by giving us cash monthly, quarterly, twice a year, or once a year depending on the company. Sounds great, right? How can we lose? Well, if it is too good to be true, it likely is. Often people lose money buying dividend stocks because the stock price drops and they lose more money on the price of the stock than they gain on the dividend. For example, I did a mock-up investment strategy where I took $50 a month and bought stock in AT&T. If there was any remaining balance, I carried that over, along with any dividends gained. And then I bought as many stocks as I could every month at the beginning of the month. I did some math and rolled it up into an eventual return or loss. As you can see, this strategy actually lost 3% in the first few months until eventually gaining about 30% in profits. If we follow this strategy over the course of years, you can see there's gains and losses throughout. eventually settling on a $20 loss as of last November, and it bounced back to about a 12% profit here this last month. Then I went on and I did some what if scenarios. So what if the stock goes up for the next 30 months, which I think it will. If we just make a guesstimate and say it goes up 1%, what does that eventually turn into? This scenario also considers that AT&T will increase their dividend payment, not this year, but next year, like they have done in the past. This would eventually lead to about a $3,800 profit, or a net return of about 63%. Now, what if the stock just stabilizes for the next 30 months? What would happen? Well, we'd eventually get a 29% return. Now, what if the stock falls 1% for the next 30 months? AT&T really goes south. They don't do very well. What happens? Well, we get down to an overall return of only 8%. Now, this doesn't mean dividend stocks are a bad investment, but a sign that we cannot blindly invest into a company just because they have a dividend. For example, if we were to only change our strategy on when we bought shares to buying AT&T on dips in stock price, our return could change significantly, up to 21%, compared to the 12% in our prior strategy. Additionally, our what-if scenarios would also show increases. Furthermore, if we would have bought into a dividend company who has actually had success, the returns increase dramatically. Apple, for example, while having a much smaller dividend yield, would have actually returned us almost 300% on our money. We could run scenarios all day, but the point is that just because a company pays a dividend does not guarantee that that stock is a good investment. In fact, if we run this same scenario for Tesla, who doesn't pay a dividend, you would have gotten a 1,226% return and would be sitting on about $61,000 as of December 18th. Now, we should all desire to find the next Tesla, but potential growth stocks come at a higher risk, while dividend stocks can supply a good amount of security. For people in their 30s, I personally recommend some of both, but everyone must evaluate their own personal situations and decide on how much risk to take. If someone has more time to research and monitor companies and has extra disposable income, they can probably take on more risks. But remember, for every Tesla, there is a Theranos.
What do you dream for?
That less people have to say goodbye too soon to people they love.
I had heard about Theranos and Elizabeth Holmes. But, her story's so compelling. She was going to herald a revolution in medical treatment in this country.
It was obviously such an incredible story. A woman creating this $9 billion company.
Everyone worshipped the ground she walked on. She could do no wrong. She was the next Steve Jobs.
The idea with the Edison was to stick the lab inside the box.
She wanted Edison devices in every home in America.
This could be the Apple of healthcare.
You all are part of something that is going to change our world. What higher purpose is there?
Elizabeth came to me, and she described her idea. It's impossible, physically.
Elizabeth was lying about the accuracy of the blood tests.
It's all a show.
She didn't want anybody to see what was going on in there.
We don't need to explain ourselves to competitive companies.
She aligned herself with very powerful men who succumbed to a certain charm.
She was deceiving investors to the tune of $400 million.
It comes back to fake it until you make it.
There was definitely something going on behind the scenes. She had bulletproof glass on their windows.
Anything I typed was watched.
It was very scary.
Like, what are they trying to hide?
The mantra in Silicon Valley is move fast, break things.
That's not the way you approach science that's going to be impacting people's lives.
Quite frankly, people can die.
It snowballed into this crazy situation.
In a panic, I went and bought a burner phone. I called the Wall Street Journal.
What is coming out of her mouth is not reality.
She never thought she had any limits. She was going to conquer the world.
This was real lunacy.
Can you tell us a secret?
I don't have many secrets.
Thanks for watching, everyone, and remember, leave a comment if you would like to request a video. Thank you.